Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Brent S., Mark R., Sean M., Brian B., Paul M., and Cindy W. Today we have a returning guest on the program and one that we're pleased to have back to join us. Mr. Ron Hochstein is back with us on the program. Ron is the president and CEO of Lundin Gold. The company is operating the Tier 1 Fruta del Norte underground gold mine in southeast Ecuador, which is targeting production during 2025 of 475 to 525,000 ounces of gold. The company continues to be focused on optimization gains with the recent process plant expansion program now completed. In parallel to production operations, the company is also conducting exploration work to expand resources, as well as advancing new discoveries for future addition into the existing production profile at the Fruta del Norte complex, which is considered already as a Tier 1 gold mine with significant expansion potential. Lundin Gold is listed on the Toronto Stock Exchange under the symbol LUG, on the US OTC markets under the symbol LUGDF, and also on the NASDAQ Stockholm under the symbol LUG. Mr. Hochstein, welcome back to the program.
Thank you. It's great to be here. Yeah, quite a bit of change since last time we chatted.
Ron, I would certainly say that's an understatement. Yes, there's been a lot of change, and you guys have accelerated on a number of fronts, and the market has taken note of what's happening here with Lundin Gold, and really appreciate the efforts there. And it's really good to have you back to update. And I guess first off here, another very productive quarter. Very good work on the Q1 results, in my opinion, which were posted yesterday. I'll highlight as well to see the cost profile where it is, despite the cost escalations out there. Exceptional work. Why don't we start here with your opening comments, both on the gold market, Ron, if you don't mind, and then, of course, the key results you want to point out, and then we'll get into a few specifics.
Yeah, you bet, Andrew. Yeah, the gold space is, I don't think we've ever seen the volatility that we're seeing today, swings of $30 to $50 an ounce in under 24 hours. But, I think what it is that we are in a bit of a world of uncertainty with conflicts and economic trade wars being talked about and everything. And people again are starting to realize there's one true source of value that maintains its value through all of these things is gold. I think the big difference from that we've really seen, and we've seen it from investor interest, and I think you're seeing it in the significant increase in the ETF volume, etc., is the person on the street. The generalist investors are really starting to look at gold. That's been a pretty significant change over the last little while. It's taken those types of investors a while to get in because if we, look at it as an industry, we didn't necessarily dress ourselves up real well based on the past performance. And so it's taken a little while for those to come in, but they certainly are coming in now. The key for investors is, operational excellence. You mentioned our costs. The team at site just continue to do a great job on, keeping our costs in line, growth, and we're focused on both inorganic, but mostly organic growth through exploration and creating shareholder value through, for us, it was cleaning up the balance sheet, and which has now enabled us to look at increasing returns to shareholders. And so sharing in that bright future. But the gold price, now we're at $3,300. You're seeing numbers now $4,000 an ounce. Where it's going, I think it's going to be volatile for the next while. But I still think that generally, if you look at most people, it's that we're in an environment of still seeing potential for more increasing gold prices, which obviously would be great for Lundin Gold shareholders.
Ron, appreciate you going through some of your opinions here on the market, how you're seeing it there, and certainly a very interesting time on a geopolitical front, and to see the gold price where it is. People are starting to take notice. It's taken a while, as you said. It's taken people a while to take notice of certain stocks like Lundin Gold. as well as the performance there out of the company on the ground, which I think really drives everything. You can talk a good story and promote a lot, but the reality is delivery on the ground is where the value is to be found. And the gold market here, very interesting. And then just again, congratulations on the cost profile. Just a surprise to me to see it is where it is, and guys have done a lot of work there to keep it down compared to some of the peer companies, which seem to be ticking up quite substantially when looking at some of the results come in here. Luckily, of course, there's a good gold price out there to help band-aid over, I suppose, maybe some of those issues, but really well done on the front here for Q1. With that, why don't you cover off some initial highlights that you want to mention on Q1 that you think are pertinent, and then we'll jump into some more details.
You mentioned that, rising gold price, rising margins. I think, a lot of investors, for us in particular, we have royalties and profit sharing in that. So every $100 rise in gold price, we essentially have an embedded $10 increase in our cost. I think that shows again what our team is able to do, because our guidance was done at $2,500 gold. So you're looking at $700 increase in today's prices, or $70 ounce in costs, and yet the team we're still within guidance. So it is a bit of a battle there. The quarter we produced just over 117,000 ounces, which was slightly better than what we'd anticipated. Our grades were better. That's primarily due to some mine resequencing. I don't mean by that we're going after high grade. It's just with the underground mine, some of our higher grade stopes tend to be better than what were modeled. And then improved recoveries. But the big thing on the Q1 was we got our expansion project completed. We had about a 4-day shutdown planned, doing several tie-ins as part of the expansion, but we decided to move ahead a SAG mill reline, and that made that shutdown about 7 days. But that's behind us. We still managed to increase or be slightly above budget, even with that longer shutdown due to the higher grades. But I think what's really encouraging is, so all that happened in February, and in March, and we started to see the benefits of the expansion project, which we've spent about 40 plus million. Been working on it over the past year, and that was to increase throughput to 5,000 ton per day and improve recoveries. And we're certainly seeing that in March, and I think we'll be able to show that when the Q2 numbers come out, about a higher throughput and better recoveries. And both of those are just mean increased productivity, which means that we're going to have lower cost per ounce with those things as we implement them. On the production side, that were the big things in Q1 for us, is getting that expansion project done and now seeing the fruits of our labor going forward.
That tug of war, as far as, escalations are definitely out there. They're still coming. You guys are trying to drive down those costs with the expansion. Just to be able to see them stay steady, I think, is exceptional. To see them reduce, that's just outstanding. We'll see how this goes here as you guys continue to realize some of those productivity gains coming into Q2 and also Q3 and onward. Be looking forward to seeing that. Why don't we talk finances first, capital structure for a moment. Cover off where we stand now on cash on hand as of the quarter, as well as, I think this is interesting, Ron, as you guys start to look out here as to some of the things you're doing on the project, maybe some of those numbers you'd like to maintain in terms of cash balance, if not grow it, or contingency, as well as that optionality and potentially leverageability with a larger balance there. Just talk a little bit about how you'd like to maintain a certain cash level moving forward here with a number of things that are coming down the pipe at FDN.
That's a great question. As of June of last year, we essentially paid off the last bit of debt that we had. So that was the buyback of the stream and the gold offtake agreement. We have no debt, so the balance sheet is clean. And so for us, the focus now really is on use of cash, capital allocation, and our original dividend policy for in terms of capital allocation was a fixed dividend that's sustainable. So we started originally at 10 cents a share and then went to 20 cents per share in Q2 last year as gold prices continued to rise. Then in Q4 went to 30 cents a share. But now what we've done going forward is, rather than sort of saying we want a certain cash balance on the balance sheet, we've gone with a variable dividend. So we've got the fixed dividend of 300 million or 30 cents per share. And we've gone with a dividend now, which will be, first payment will be in this quarter, which is a variable, which is essentially 50% of normalized free cash flow, is what we're calling it. so that our shareholders essentially are going to be able to participate as gold prices continue to rise, or we can bring costs down as our free cash flow goes up. Our shareholders will be able to participate in that. And it's a minimum of 50%. And also what we did is you'll see that your listeners will look at it and say it's normalized. What we did is we have some chunky payments that happened during the year, and what we wanted to do is try to normalize it, to try and make it a little bit easier for shareholders to manage the expectations, not see wild swings in that variable. So we've normalized it. So that said, we ended the quarter with about just over 450 million in cash. We started the year at 350 million, so generated about 194 million from operating activities. 73 million was paid out in dividends and another 24 reinvested, which brought us to that 452. And now with just our Q1 numbers out, we've announced that we're roughly paying about 208 million in dividends, of which a portion of that will be the fixed and variable, which will be for this first quarter. It's 30 cents a share, the fixed, which I mentioned. The variable, if you look at our free cash flow for the quarter and then you make that normalization adjustment, it's rather 15 cents a share. And then we made the decision based on the fact that, again, it's not managing it to a cash, but just really, again, our whole philosophy is creating shareholder value. We had a big run up in price, one that I don't think we've ever seen, and that happened in Q4, Q1. And so we made the decision to also include a 100 million special dividend so that this essentially allow our shareholders to say, look, we did really well in Q1. Thank you for your support, and here's a return on it. But then going forward, we've got this variable component now, which will enable our shareholders to take advantage of that. The balance sheet's clean. We still, if we wanted to, could bring on an RCF, a revolving credit facility, debt capacity. Now we're in the position with the variable dividend to give our shareholders the ability to see that we are serious about returning capital to shareholders, but still generating the cash to allow us to pursue growth opportunities or M&A if such opportunities arise.
Ron, I want to I'll come back a little bit into the money here on sustaining capital items, but I want to do that under operations, which we'll move on to here in a moment. Just so the audience is clear here, we have a fixed, we have a variable, and then you guys also elected a special this last quarter. So just so folks can understand what's happening there and how that's being looked at. And obviously, some of that obviously is going to be variable going forward, and sustaining capital items plus some of these other opportunistic events, maybe we will say, Ron, as well, that will come up, and you guys will have to make those decisions as you move forward. So a bit of a balancing act, but you have a good foundation for certainty for the investors there. So I think that's important to point out. I'd like to move on to operations here. Process plant expansion and optimizations completed. Just talk, and you started to allude to this already. We've seen recoveries start ticking up a little bit here, but there's some other items that'll come in that is going to help out here. Talk about some of those early results coming out of that. And then, of course, I suspect some of the kinks will be worked out further in the coming 2 quarters. But just talk about some of your takes on that success so far with this optimization work.
Yeah, you bet. Just to remind everyone what our goals were with the expansion project, which was to go from 4,500 ton per day at the processing plant to 5,000 ton per day, and to look at improving our recoveries by 3 percentage points. So going from that 88, which was the average previously, into that 90-91% average recoveries. That was the 2 flagship objectives of the program, and there was a variety of things, from some changes in the feed arrangement in the ball mill through to a new tailings pipeline and a reclaimed water line. So lots of changes throughout the plant. Initially, March, we're definitely seeing that we're able to meet that throughput, and we started to see those improvements in recoveries. But the flotation cells that we've added and the new concentrate filter, it's really changed the circuit. And now we started to see the preliminary indications that, we'll make that 3%, but now we need to optimize. And also we're identifying potential bottlenecks, and we're seeing that, we wanted to get to 5,000 ton a day. Right now, we're putting several days together where we're running at 5,400 and even a little bit higher than that. So now's the time, and that's what we started doing in April, and we're still working on it here, is to optimize now to say, what can we get to? And I think, it's going to be an exciting period to see, things are looking pretty encouraging, and hopefully that continues. There is a lot of variability in the ore body, but we're encouraged by what we see to date. And yeah, I think we'll be able to, when we put out our Q2 numbers, I think shareholders are going to really start to see the benefit of what that expansion project has done for us.
Definitely looking forward to seeing how this is going to assist on the bottom line there. And of course, combating off, I suppose, Ron, if you will, those escalations that are happening out there in the sector. Well done on that work, getting that done, initially getting some results already out of it. So that's fantastic. And the recoveries, I think, have been excelled really well. A little bit more left to squeeze on that from what I hear. So we'll keep an eye on that. Underground development there, discuss a little bit how things are going with underground development work, and of course, keeping inventories moving along there. Any comments on the underground work you want to cover?
I think the underground development is going really well. I think the big things for us now is if we move a little bit into some of the results we had from our exploration programs, we brought in a new resource, FDNS, which is the southern part of FDM. Is how now do we bring that from a resource into our mine plan? And so we're really focusing on that, doing a lot of conversion drilling, doing engineering and everything to see how can we bring this great resource into the mine plan. In terms of the conventional FDN side, yeah, things are going well there. We've been blessed with a paste plant that actually worked, and we're shutting the paste plant down at times because we don't have stopes to fill, which is a nice problem to have. And generally, the mine overall is running very well.
I'll come out to near mine exploration in a moment, Ron. You just started to touch on that a little bit, but on sustaining capital items, expansion work on the tailings dam, you've got a little bit of portal improvements, diesel gen set commissioning that's been brought in, supplemental there, water system improvements, and of course, conversion drilling. You touched on that. Just cover off the rough allocation of capital there, as well as any updates you want to mention on these work items.
About 50% of our budget for 2025 is the raise of the tailings dam that you'd mentioned, Andrew. That's running around 20 million. That work actually got delayed a little bit. We made the decision to push off on that a little bit because we just had some other things that were going on at site. So some of that sustaining capex will get pushed into 2026. The south portal, getting that up and running, we'll be using that south portal for helping doing some infrastructure work, putting in a raised bore likely next year to help provide more ventilation in the southern end of the deposit. And also it's now being used as a place where we'll have one, if not two rigs in exploring the southern extension of FDNS. There's some other infrastructure that's being done, some new water treatment plants, the sewage treatment plants. We had committed to meet IFC standards. We're meeting national standards, but we committed to IFC. We need to put some investment there. The team at site, a lot of the GM and all the others are still working out of containers. So we're actually going to go ahead and build a proper administration building now, which will make life a lot simpler and a lot more efficient for a lot of our management team. Those are the big things. There's some things within the mine. Some of our mine equipment now is getting up to be 8, 10 years old. So we're starting to get some component replacement, and there too is another part of sustaining.
Appreciate you covering that off. Some good stuff there as well. Just on the conversion drilling side of things, related to the resource here, just so everybody still understands where we stand here, remind the audience of the current resources. All categories would be fine.
Our current resources are roughly about 4.3 million ounces in indicated, 2.4 in inferred, and 2.8 in measured. So there's 7 million ounces in measured and indicated, and another 2.4 in inferred. That inferred was as a result, a large part of that is as a result of an exploration that we only started in Q2 last year on what we call FDNS. It's essentially a southern extension of FDN. Within 6 months of drilling, we were able to add just over 2 million ounces there to our resources. So the big push now, and what we're really focused on is conversion, is to be able to try to bring that into the 2026 life of mine plan. So there's It was originally going to be 15,000 meters, primarily on FDNS. We've now just recently, as of today, we announced that's going to 10,000 and add an additional 10,000, to take us to 25,000 meters, 80-90% of it on FDNS, to be able to bring those resources up to indicated from inferred. We also have probably another 15-20,000 meters of drilling. Now, this is all from underground, so that's a lot of holes to grow FDNS. So our plan really is to be able to take what's currently inferred up to indicated and be able to add additional inferred back in. So increase our overall resource base and then be able to replace depletion in reserves. I've never been involved my whole career where we put 17 holes into FDNS, and typically here, yeah, we had a 50% or 60%, 75% success rate in terms of those holes hit what we expected. Not on FDNS. 100% of the holes we put either met what we expected based on our geological model or actually improved our understanding or added ounces to the resource, essentially, for FDNS than what we originally had. And so far this year, it's been very encouraging, and hence why we added 10,000 meters, because we really hit that hard to be able to bring that into the mine plan.
Ron, that's absolutely a great success, and to get that kind of conversion is fantastic on the success rate of that program. And I suspect more to come here. I mean, it's pretty impressive what you guys were able to get there at FDN South. Ron, so we have a good indication, definitely the focus. FDN South is going to be a key area here that you guys are going to work on pretty hard this year. Just continuing on near mine exploration, you guys also have Bonanza Sur, FDN East, and then you also have some new areas, Castillo and Tranquiloma. Just talk about what work you guys will be working on there, and then stop at that, because then we're going to talk about regional.
Essentially, in even just one quarter, the exploration, what we're seeing as our priorities, and that has changed a little bit. FDNS is by far our number one priority because that can create value for shareholders in the very near term. But we were pushing on Bonza Sur to have our initial mineral resource estimate out by mid-year. Knew we had to drill along the eastern margin of Bonza Sur to see whether there's opportunities to grow or at least better define the eastern edge. And then also too, as a result of our geophysics that we had done last year, we saw there's a fairly large anomaly. And so we drilled that, and that's called Tranquiloma. And that's to the east of Bonza Sur. Tranquiloma hit arguably one of the better holes from a copper space that we've seen lately. It was 858 meters at 0.41 copper, 0.1 gold with some silver and moly, or 0.5 copper equivalent. 858 meters from surface. And that hole ended in mineralization. And it included approximately 450 meters at a 0.65% copper equivalent. This is pretty great results. And so now what we've made the decision to do, because we need to really better understand what's going on between Bonza Sur and Tranquiloma, which essentially are side by side. As I said, we're going to hold off on the mineral resource estimate on Bonza Sur and really do a lot of drilling in this area, try to understand what's really going on. So we've got 3 rigs on Bonza Sur. It's also still open to the south, so we're focusing, those 3 rigs are going to focus on the south. And then we have 3 rigs on Tranquiloma. I wouldn't be surprised if we up that as the year progresses. Yeah, this is something totally new and very exciting. So essentially, the potential, it's early days, but still potential for a pretty nice copper operation besides one of the best gold operations in the world today. So at some point in the future.
Some good stuff here, and I know we definitely had some of that discussion on the conference call earlier today as well, which I'll come back to, but I just want to cover off, first of all, fantastic results. This area near mine is proving up to be incredible. We want to remind the audience too that there's the regional exploration program, and you guys have a substantial complex beyond the mine. First on that is that you guys want to work on testing some targets and are doing some initial work in the Gamora district, which I believe is some 65 kilometers to the north, if I am correct here on my map, is that you guys are looking at some porphyry systems potentially in this area. just cover some of that initial work, Ron, and then when you would expect, based on that initial surveys and testing, that you guys would see maybe a first drill test of some of those identified targets.
We've got a number of targets to FDN East, but the regional program is very early days. And Gomorrah actually was part of, if you remember, Andrew, Gomorrah was actually part of a joint venture with Newcrest. And they had done some drilling up there. And there's a lot of opportunity. The team's been up there now looking at it. Again, porphyry type mineralization. Andre, our VP of exploration, says that we've already got some potential drill targets ready to be tested up there. This whole district has so much potential for porphyry. If you look at it, we've got this new Tranquiloma discovery. You got Mirador operations, which is two porphyries there. They got Mirador, which is the one they're mining, and then they're expanding to go after Mirador Norte, which is right there. And then you got Gomorrah, which is just to the north of that. And then you go a little bit further north, you got Warintza, the Solaris projects. Just a lot of potential there. It just shows how prospective this whole area is and how prospective Ecuador is.
Yeah, I think it's key to point that out, as you guys have not scratched too much of that regional bit, and I think that's it's a substantial land package that you guys do have there as well. So looking forward to seeing what you guys decide to go after first, as far as that testing on the drill bit side and some of those initial results. So that'll be good to see here as you guys progress that this year and into next year as well. Ron, well, short of that, I wanted to move into health and safety, community work, and government relations. I'm sure there's a few points on each of those you would like to cover off in kind of that three categories. Anything there you'd like to touch on for the audience?
I think one of the things I was not happy about, Andrew, was where health and safety we ended up last year. We ended up with what we reference it, probably heard of it, TRIR, total recordable incident rate. It's typically stated per 200,000 hours worked. Our goal last year was 0.4, which is industry leading. We ended up 0.66. Now, I'm not happy with that. Our team wasn't happy with that because obviously we're well above our goal. But that said, that still puts us, if you compare ICMM and many other statistics, still industry leading. That just, I think, is part of our team. We're not happy with being industry leading. If we say we want to do better, then we want to do better. So we weren't happy with it, but so far this year, our TRIR, we've had no lost times, touch wood, and our TRIR is around 0.21 at the end of the quarter, so we're doing much better. The biggest thing I think and I say we because it's me, it's also our ops management and everything we talk about is complacency. We don't want to we're having a lot of success in operations and everything, but we can't become complacent. So it's something we really focus on. On the community side, we continue to have strong support. We celebrated our 10-year anniversary in January this year. What really showed is how the community of Los Encuentros and the local areas changed in that 10 years. And we held some events in Quito too, and I think it really opened up a lot of people's eyes as to what mining could really mean. We've issued our 2024 sustainability report, which is available on our website. But also too, we're in the last year of our initial 5-year sustainability strategy, so we're now in the process of pulling together the next 5 years, which is exciting. We're seeing how the operation's maturing. But we're also seeing how this on the social side, you always talk about social license to operate, but now we also have a social license to explore because we're going outside of FDN. We'll have more on that as the year progresses. On the government relations side, there was just a national second round of an election for president in Ecuador, which was just a few weeks ago. It was anticipated based on the polls to be a very tight election between the two candidates that finished first and second after the initial election late last year. But it ended up being Daniel Noboa, who is the current president, won by quite a significant margin. That's great. He's been a big supporter of mining overall. So it's not just Lundin Gold, but the mining industry. But also, too, in the election that was held late last year, the National Assembly now has two fairly significant blocks. One of them, which is Daniel Noboa's party, the other was the party of the other candidate that was in the runoff. That said, Noboa, along with some alliances he's built now, has a majority in the National Assembly. That is really important for the country of Ecuador because the last two administrations we've had, the National Assembly was very fractionated, and it was very difficult for the president and his cabinet to push anything through because the National Assembly was so broken up. Now we've got this more consolidated National Assembly. So in turn, for Ecuador and for the mining industry and Lundin Gold, it's a very, I think the next 4 or 5 years are going to be very exciting for the industry. And I think it's really what Ecuador needed is some stability in the government. And from the mining industry, a government that has stated they're very supportive of mining.
Ron, thank you for going through that. Health and safety from our desk looks really good. I really appreciate your guys' efforts, but you're absolutely right. You can't become complacent. And certainly during exceptional operations, it's difficult to manage that. It's always a balancing act. So I appreciate how you guys are keeping folks motivated through some of your programs on HSE and some of these things. Keep everybody on their toes and don't fall back on your heels, so to speak. And that's hard to do. It has to be on a daily basis to incentivize and motivate and run through all those drills and experience transfer and all the things that have to happen, the protocols. It's a lot of work. So appreciate where you guys have been able to be industry leading, maybe just a little bit below your expectations personally, but nonetheless, you guys will certainly get there. On community, I read through some of the stuff on the community side. I think you guys are doing an exceptional job there and are providing a model to do the level of community work that you're doing is very good. A few NGOs out there would say, well, they're doing too much for the community, but we'll leave the NGO part of it out. You guys are doing a great job on handling the government side, and I appreciate your comments towards the election stuff as well. And I do think as well, just on Ecuador, I think that this is providing a good platform, and I think Ecuador is really Fruta del Norte is the model, as we've discussed in the past. This is a huge windfall for the country, and I think it helps put the right taste in the mouth for Ecuador and how important mining is and just how well endowed the country is where it is in South America there as well. I think that's important to point out. So I'm very optimistic as well for Ecuador in the coming years, especially on a little bit more sound policy that they have there now. I think it's a good thing that we have this election result and hopefully moving forward. Ron, on a separate note, I'd like to collect your thoughts on M&A as far as in the market generally, but then also, we've seen transactions continuing here, more transactions coming in, but then also what you can say with respect to company strategy around M&A, adding that if there was a great opportunity on M&A coming back to budget on the acquisition front, would the company utilize leverage if needed to get a good opportunistic M&A event completed?
I think M&A always comes up and can answer very quickly. Yes, we definitely would take advantage of an opportunity if one presented itself. There's three key words that we look at with regards to our strategy on M&A, and it's opportunistic. So if the right opportunity is there, we're going to go after it. That's one of the things we've done in the past, and we can show that we can do. Take advantage of things, move quickly. It's a Lundin Group trait. But discipline and patience are the other things. It's not like we have to solve anything with M&A. You look at some of the recent transactions, some of those have been because they need to solve something, and some of them they've been pursuing M&A because they wanted to grow. That was the objective behind it, or they needed it because they were, need some good news or to try to dilute the bad news that was coming or something like that. For us, we don't need to solve anything. We don't need to grow for the sake of growing. We've got a lot of organic growth in front of us, as we've just talked about. But there are going to be opportunities out there. And so it's not like we're saying, oh, we're happy with what we got. Let's just sit and be happy within our own household. No, no, no. We're always looking for opportunities. And yeah, if the right one's there, we'll move fast.
Rod, I think it's important to cover that off the way you did cover it off. You guys don't have to answer any of those questions. You've got a lot in front of you. And then also, it's hard to beat what you have. So then when you guys already come into this with kind of a high standard in the sense that you're looking at assets out there and it's like, okay, how creative is this? And you're right. You don't want to do this just for the sake of M&A or for the sake of growth or any of that. It's just really that can you find an asset that's going to meet the standards to actually move the needle with what you have? And I would say that's probably one of the other
Yeah.
tripping points is, man, this is just hard to find something that we think we can really move on that makes sense, given the assets you do have. So I think that's important to point out as well. And I think back to budget, as you guys look at potential bolt-ons to the FDN complex, the expansion work, and then also leaving money out there as well for potential M&A if something actually comes along. I mean, you guys are in a very good position, and how fast you've been able to come into this position is also quite impressive, going back to the roots of the acquisition days and where you guys stand today. So I think that was important to add into what you said there. Also, has there been any discussion surrounding improving the US OTC listing to an NYSE Amex listing in the near future?
Yes, we have discussed it, but I think we're pretty happy with where we are on the TSX. And, we also trade in Stockholm because of Lundin backing, but we struggle with what the potential benefits may be going to a US listing. I think with our shareholders can access this and that we just, at this point in time, yeah, we're pretty happy with where we're at.
Always a tough question to answer, especially looking where you guys have been and the success already. And then certainly you have some of those other listings there as well. So we'll see how that progresses in the coming years. Well, Ron, short of anything else you want to add, I think it's been a great update on the company here, great results, and want to congratulate you on that win for the quarter. And why don't we leave it there for now? But before we go, for potential investors who are listening in, Lundin Gold has a market capitalization of about 14.5 billion Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors portfolio at this point?
Well, again, thank you for the opportunity, Andrew, to speak to your listeners. But, I think for Lundin Gold, the future's so bright. I think we're all saying that, where's gold price going to go to it? There's a lot of people have a lot of forecasts higher than that. And if you look at it, where would you like to put your money? Well, you'd want to put your money in somewhere where the margins are continuing to grow. And we've now got a policy and a track record of showing that we're returning capital to shareholders. We're not, sitting on it or just hoarding it for some opportunity to come. Our policies are in place to continue to support that. If you look at the upside potential in terms of increased production or opportunity, some of the initial results on our exploration show that there's some very exciting times coming as we move forward with the further exploration on Trancaloma, FDNS. There's some holes we're drilling underneath FDN itself. I'm really excited about what those may prove for us in the future. So the future is still very bright with our fundamental pillars, which are operational excellence, cash flow management, and growth. There's still a lot to come.
That's the best way to call it right there. Is a lot more to come yet, and looking forward to seeing some of these results come out this year and also into next. Probably be a few surprises along the way. Ron, how can interested parties contact the company for further information?
Yeah, we can be reached. There's an email address on our website, which can be reached at www.lundingold.com. Just reach out there, and those emails are responded to very quickly. The other thing that I would encourage investors to do, I know it's in Spanish, but maybe look at some of our social media channels, which are primarily out of our Ecuador group, but there's some really interesting videos and opportunities there. And if you had any questions too and prefer to converse in Spanish, that's open, and we'd respond to you very quickly on that front as well.
Ron, thank you for that additional info, and encourage the audience to reach out and do the same and check that out. Ron, well, look, we're looking forward to having you back again to update. Always a pleasure, and keep up the excellent work at Lundin Gold.
Thank you, Andrew. Thanks again for the opportunity.